Okay, welcome everybody. Welcome back to Road to Retirement. My name is Chris Anselmo. I'm here with Tony Shore from Minnesota, but it's not snowing there. And our
No.
internal guy, Tony Marlette. How you guys doing today?
Good morning. How are you
Good.
guys?
Good. I'm trying to
Doing great. I've been great. I'll tell you what, I'm glad to finally have some nice weather to get outside, actually.
Yeah, same. Before you
Try to
got
get
on.
some of this pasty white skin, get a little color, right?
Yeah, it's been pretty rainy here and cold, and but I think today might be a nicer day. So I have to sneak out and hit one of those little white balls around. So
Yeah.
Uh-oh. One of the many behind you there, Chris?
oh
I
no,
mean,
no,
you've got
those
a
are
couple
those are
hundred.
special. Yeah, no, those it's funny. Those are when I go out of town. Like if I go to Minnesota and I play a course somewhere, I'll grab a logo ball and put it in there. So I probably got on about 100 balls up there, and some lady during
Those are all your
tax season-
holes in one, right?
Yeah, she asked me if those are all my hole in ones. I'm like, yeah, I got 100 hole in ones, and I'm sitting there doing taxes for a living. But yeah, I don't think so. So I'm trying to get this to expand for me, but that's okay. We'll look at it this way.
It looks great on my end.
Okay, so today I thought we'd talk about. We haven't talked about this in a while. Maybe there you go. God bless you, Tony. Some life insurance. That's becoming. It's one of the other options we have in our tool we have in our quiver for people, and so maybe we'd go over how people use life insurance, when you need it, when you don't need it. Is it a decent investment? Is it a place to park money? So, and any immediate comments there, Mr. Marlette?
Yeah, I mean, when you use those words together, life and insurance, people don't usually respond well to it, and it's unfortunate because it's gotten a bad rap over the years. To some degree, people will say, "I don't need it, I'm covered," but like you mentioned, there's a lot of different things that we can do with it to treat it as a safe investment, especially now. And then also to provide some nice side benefits down the road too. So in other words, you use it no matter what.
Yeah, I know we've used it a few things. Traditionally life insurance as you're younger, if you're your age, Tony, really is probably to provide, and most people probably buy term at that point, but in case you die early. Like I know when I was 40, just a couple of years ago, I they'll never fall off their chair here.
My side hurts from the laughter, Chris.
So, like I bought a term policy for $1 million, and it was pretty cheap. I think it was $900 a year for 20 some years. And then, just in case if I died prematurely, my wife and kids would have some money, pay off the house, all that kind of stuff. So a lot of people use what we call term insurance, which is cheap, but I believe, statistically, I think 90% of term never pays because either the term runs out, the 20 years goes by and it's done. And, if I want $1 million a year while I'm 60, it's probably $30,000 a year for the premium. So I think term is really used for stopgaps for, what happens if I die and we don't have any money laying around, how are they going to bury me? How are they going to pay the mortgage and all that kind of stuff. So, but then there's
with that, I mean, you're looking at pure protection, like you said, just
so
pay your premium and it's pure protection.
There's no investment component of it. It's just, if we die early, here's some money. So there's other types of policies, right, Tony? There's permanent type of policies.
Yeah, and it's worth mentioning too, any death benefit is tax-free to the beneficiaries.
True.
So,
right.
But yeah, there's
that was some great lobbying, wasn't it? Insurance companies lobbied Congress for that many, many, many moons ago. So,
and obviously it's not, I was at a summit last year. That benefit is something that is never going to be messed with. It's never going to be touched. Life insurance will probably always be, there's no guarantee, but it probably will always be tax-free to beneficiaries. They've talked about tinkering with other things, Roth, pre-tax, tax brackets get messed with all the time. The one thing that is probably never going to be touched is our life insurance benefits.
Right.
But yeah, to answer your question, yes, there's permanent policies too, which are more expensive than a term policy, but you get more with it. So for example, you can have cash value. where at a certain point you keep paying your premiums, and your premiums are essentially getting invested in the insurance company's separate bucket, as they call it.
Right. So part of your premium is going to pay for the cost of the life insurance, and part of it's going to in towards the investment. So,
Correct.
Mr. Shore, do you have any life insurance?
I have some. I have a policy through the main company I work for, and they have an option where they give you X amount free. It's really small and basic, but then you can pay a little more and up it. And then my wife has some, but I don't have like the cash value, and
Right.
I probably should have more. But here's my question for you guys. Since you guys are the experts at my age, let's just say I'm going to throw out a number that's not even real. Like, let's say I was as old as 57. I'm just saying.
Yeah, somewhere
Nice
around.
random
and
number
let's-
that you picked.
Yeah,
and,
somewhere
let,
around
and let's
in
and
3
let's-
months.
yeah, and let's say that I might have what doctors call a bit of a weight problem. So if I wanted
you're
to,
just too short, Tony.
Was that your Chris Farley? That was great.
He's just too short for his.
I might have what they call a bit of a weight problem. Anyway, what if I want to get life insurance right now? Am I out of luck because of maybe I won't pass the health? I have diabetes. I'm a little overweight. I'm 57. Am I out of luck, or is it just going to be cost prohibitive, or are there options? I mean, what about older people?
Yeah, most it's gonna your premium's going to depend on a few things, right? It's going to depend on age, obviously. It's going to depend on health. It's going to depend on maybe family history, whether also maybe you have a high risk job. If you're a guy who's a high tension electrical guy, you're going to pay more for your premiums than
radio show co-host
than the radio show guy, right? So the all those actuarial numbers, the insurance company has actuaries say, look, Tony's 57. He's a couple pounds on him in a year, but what's going to happen is you're not going to get the preferred rating. You might be standard, or you might be a little bit under standard, but they're going to, there's going to be a policy for you somewhere. Just it's going to cost more.
It'll cost you more. And we call it the Olympic Village rate. Basically, nobody gets the preferred rate unless you're an Olympian.
Yeah. That's super preferred, right? Yeah.
Yeah, right. And I mean, a good way to look at it is, Tony, don't wait. Hindsight's 2020, but don't wait for those things to happen.
Yeah.
I'll give you an example on me. I started in this business doing life insurance. I was 25, 26 years old. I did a simple 50,000 universal life policy. It was small, it was affordable, and I wanted to do it. Kind of like my first investment, my first insurance policy. About 6-7 years later, I was diagnosed as type 1 diabetic. I went to take out a term insurance policy after that, and it is way more expensive than that universal life policy that I took out when I was in my mid-20s. So, don't wait until that happens is the best way to do it. And if you do wait, you're just going to end up paying more, like Chris said.
Sure.
Well, I don't know what I just did there, but
and I asked, the reason I asked is because for our listeners, I'm sure
a
lot of listeners to this show are people who might be thinking about retirement or whatever. So if they don't have as much insurance as they would like, as far as life insurance, they're probably wondering, okay, can I still get life insurance at this point? I think you just have to, what you're saying is you have to jump through more hoops, and it's going to cost you more.
Sure. And, the other reasons we use the life insurance is, final expenses. I don't want to say that's minimal, but most people who are retired by now, like they have money, they could pay for it. Somehow they could pay for the funeral. So we don't necessarily use that for a policy. We do occasionally use a small policy for Medicaid reasons, because Medicaid lets you put about $15,000 in a policy for final expenses. But it is a mechanism to supplement savings. I mean, your IRAs that we have, most retirement plans that are out there, we call they're tax time bombs. Eventually, someone's going to pay these taxes, whether it's going to be you or your loved ones. So maybe it makes sense to start converting some of that. We've talked about converting it to Roths.
Right.
You might want to convert it to insurance because one thing happens immediately. On day one, you have coverage, right? So if you buy a $500,000 policy, you can die in 2 months from a car crash. You're getting paid $500,000. You might have already maybe you only put $100,000 in it, so you really leveraged there. But to take $100,000 and put it in a Roth and to grow it to $500,000 might take a lifetime. Right. So there is some leverage with life insurance. Life insurance in theory gets more expensive the older you get, but for the insurance company, their risk, it's the opposite. They have more exposure early on in the policy. You put in $100,000 and it might pay, $500,000. 20 years from now, that your internal numbers growing to $400,000, so they're really only on the hook for $100,000. So they obviously they want you to live as long as you can, so they can use the money, and their cost in the policy gets less. I don't know if I explained that right, but
I mean that makes sense. The more you put in, the longer you live, the more you put in. The insurance company, in your example, they're paying out $500,000 whether you live 1 week or 55 years after you take out the policy.
Right.
They're paying out the $500,000. If you die after paying one premium, they're on the hook for all 500 minus whatever small premium you've paid.
I think Tony Shore just went blank, but that's
no. I'm here. I was listening. I'm thinking about it because obviously one reason then a lot of people, especially my age and older, are preparing for retirement. What they're going to want to do is they can utilize certain types of life insurance as cash value policies or as almost a saving or investment vehicle, or to pass along money to loved ones because tax-free, right?
Yeah.
I mean, it's a way to leave a legacy tax-free, which is huge, right?
Yeah, and and what we found is, when you compare, say, we talked about indexed annuities on other shows, that's an insurance product, and there's index life insurance. Well, oftentimes when we look at the index life insurance, the cap rates that we call the potential for you to make interest in those are maybe 2-3 times the cap rates that are annuities. So let's say you buy a fixed annuity and the cap rate's 3 or 4. Well, the cap rate inside a life insurance policy might be 8 or 9 or 10. So you have potential to earn more interest in the life insurance policy, and you could design them 2 different ways. Somebody could come to me and say, Chris or Tony, look, I want to spend X amount of dollars, buy the biggest death benefit. We don't care about how much cash it builds up. So then you design the policy to buy the biggest death benefit. And the other people say, look, I want to use this somewhat for a retirement vehicle. I don't really care about the death benefit, but I would like some tax-free cash because I'm in a higher bracket. And if I just keep pulling money out of IRAs, I'm paying 30-40% IRS. So you really can't tailor them to the need. Is it purely death benefit? So term insurance is purely death benefit, right? There's no cash value. There's no give me some money because I need some tax-free income. So term, if you truly want just death benefit, maybe we use term, but term gets really expensive, right? So
the older you get, I mean, your term, if you take out a 20-year term, like in your example, if you were 40, by the time you're 60, I mean, the odds are you'll still be alive. And then at that time, the term, that's good for you.
Good for you.
Good for the insurance company too. They don't have to pay now.
Yeah. But you talk about structuring those policies. I think the biggest differentiator with these is tax-free income. So you can even take qualified taxable money and move it into something like this, get the taxes on your principal out of the way.
So you pay the tax.
You pay the tax, and you realistically don't have to pay any more taxes regardless of the earnings from the insurance product.
Right.
It's kind of like it's almost like a Roth conversion.
The other thing we've used for, and I think there are hybrid products out there for some long-term care benefits.
Absolutely.
Traditionally, people buy long-term care policies, and I just don't think that industry, I'm going to say it's the wrong word, worked. Actuarially, if, you insure 100,000 houses and 2 of them burned down, or there's enough premium there to pay for all that. But statistically, we've talked about on other shows, 2 out of 3 people over the age of 70 may spend time in a nursing home. So actuarially for an insurance company, they sell 3 policies and 2 of them are being used. That's not really working out for them. So what's happened in the last several years is premiums have substantially increased as people get older. It used to be pretty steady, but I had one of our guys who just retired from our firm a couple of years ago. He got a notice from his insurance carrier that they're raising his rates 423% in 1 year. So
inflation,
he's like,
right?
yeah, yes, Biden inflation. No offense. But he's like, I can't pay 400 times what I'm
Right.
paying.
Is that for a long-term care policy?
A long-term care policy.
Yeah.
So basically he says, so they actually gave him an option. They said, look, you could pay the 423% increase, or we'll give you $10,000 and you can go away. He took the 10 grand, right? So that industry, it's been tough. So we have seen over the years hybrid life insurance products that have some long-term care benefits. One that comes to mind, there's one that let's say you put in $100,000. It's going to pay some minimum amount of interest on the life insurance side or annuity side too, and maybe they give you 3 times the coverage. So there's a lot of things out there to check out that weren't out there 20 years ago. So
right.
And life insurance, believe it or not, is one of the few items in our country that has come down in cost over the years because people are living longer. So as people live longer, the insurance companies keep the money. Instead of paying death benefits out at 70, now they're paying them out at 80, 85. So they're able to keep the money longer. So we have seen that. So if you have an older policy, probably at least 15 years old, you might want to look at it. Maybe you can get more coverage. Maybe you can get a lower premium. So, but it's worth doing a review, and we got software and back office to do that, right, Tony?
Yeah, for sure. One thing that we've seen with some of these is, if we take money that you have sitting in a savings account or an out of surrender old annuity that's maybe not earning as much, you move it into something like this and you use, typically with life insurance and long-term care policies, if you buy them separately or you have kind of a standalone policy, you don't guarantee that you get the money. If I have life insurance, I don't get to use that money, assuming there's no cash value. It goes to my wife or my beneficiaries. If I
you have to die to get it. That's always like one of the I don't say negatives was people always say, look, I got to die to get it. Well,
and you don't even get it then.
Yeah, well, in a term policy maybe, but the other, the permanent policy, you can use it while you're alive. You can take out, like you said, you take out cash-free withdrawals from it.
Same concept with long-term care. If you're the one person that doesn't need it out of the 3, 2 out of 3 are going to need it over 70. If you're the one that doesn't need it, you've paid all those premiums that are very expensive into the policy over the years. And if you don't pay more for a return of premium benefit, you don't really get to use those dollars that you put in. So the index life that we're talking about, you use the money no matter what. So you get either death benefit, long-term care benefit, or cash access.
And Mr. Shore, you might have seen PBS specials with Ed Slott. He's one of our guys who go too. So I mean,
I know all about Ed. He's great.
Ed Slott's great, but if you really break down his presentation, is get your money out of your tax bomb vehicles and buy insurance because it's tax-free. It's tax-free to use, tax-free. So really, it is something to look at.
His big thing is insurance because it's tax-free, and Roth IRAs because they're tax-free.
Right.
And Roth IRAs are limited to who can do them. So that sends you over to life insurance and a lot of different insurance policies.
Yeah. The issue with life insurance, though, is like you say the word life insurance to people in front of you, and all of a sudden you look like they're staring at you like you're trying to sell them a used car, right? So I actually have. I was at one of our seminars or whatever, and I don't know if you've ever seen this, but there's a book. What do we call it? Like a folder? The cover that goes around a book. There's one that we got at one of the presentations. So they said, like, if you ever really want to read a book on an airplane, just put this cover around the book. The cover says "How to Sell Insurance to Someone on an Airplane." So people leave you alone.
The dust jacket.
The dust jacket. So they're like, the people won't talk to you. Just you'll be able to read your book. So, but it
That's
does serve
funny.
a purpose. So it is worth talking about, or at least approaching. And maybe it's just an old policy you need to really have reviewed and converted, Tony, because there are. And people probably don't know this, Tony. We talked about it, even when we were talking about my policy that might come due in a couple of years. That you possibly can convert a term policy.
Yeah, absolutely. So you can take a term policy, convert it to a permanent policy, and what you're doing there is you're locking in your health status as it was when you took out your term policy.
Wow.
So if I had done things the opposite way in my mid-20s and bought a term policy when I was 25 before diabetes and converted it to a permanent policy, the diabetes doesn't matter. Attained age does, but your health status gets locked in as of
so
the time
age
you take out
matters?
the
No, just
term
kidding.
insurance.
Damn. So the 20 years matters then?
The 20 years matters, yeah.
But the other thing, with life insurance, as opposed to annuities, look, annuities you can always get, right? Because you're putting up your own money. Life insurance and long-term care insurance, money's just not enough. You have to be healthy, right? So not healthy, but you can't wreck your car and then the next day ask Allstate for some auto insurance to fix the car, right? So if your health is, you have to be able to qualify for the policy. Now, Mr. Shore said earlier, well, what if I have issues? Well, it might just cost more, right? There's going to be a company. I shouldn't say. I mean, most likely we can find a company if you really need insurance to get you insurance. Unless you're like you're on your deathbed. Right?
Well, one other way is just to kind of answer Tony's question before about can I get it? I mean, like you said, Chris, the answer is probably yes. And then another way we can look at this, not to get too off track here, is we have annuities that will offer life, or they can't call it life insurance, but a death benefit roll-up where you're buying an annuity, not an insurance product. So you don't have to go through any medical underwriting. You could have, you could be in whatever shape up to a certain age, and you're going to get a roll-up. You're going to pay a little extra for it, but you're going to get a death benefit roll-up, and it's not tax-free, but that could take the place of going through a medical.
And there's also there's joint policies, so you could get like a last to die policy or first to die policy.
Sure.
So maybe Tony, you and you and your wife get a policy, and you're covered because they were able to cover her, right? So obviously premiums are going to reflect that, but maybe you could get coverage if you went to a joint policy. But I can't believe we're almost 25 minutes into this, and so I just wrote a couple things down: tax-free income. Money for dependents in case you die early, funeral expenses, long-term care coverage, and supplement your savings. Those are the 5 things I kind of looked at. If you need to talk about insurance, call our office, get a hold of Tony Marlette Jr. Tony Shore's not going to help you, but
no,
he'll just he'll tell you to call the number at the bottom of the screen. So
yes, I will. Yep, 440.
Good.
Yep. Go ahead.
440 for listeners, because not everybody's watching this, right? So 440-886-3550 or brooksidetax.com. These are on podcasts. Where are the podcasts at, Tony?
Apple Podcasts, Google Podcasts, Spotify, or Apple Music. All the 4 major podcast sites where you listen to podcasts. You just type in Brookside Tax or Road to Retirement.
We're going to figure out a way to upload this to our YouTube channel. And I don't know if Tony's been I know Tony's been doing weekly or monthly commentaries and uploading them to LinkedIn, I think. So.
Yeah, we've been doing them LinkedIn, on the website, and then we do put them on the YouTube page too.
That's excellent.
Okay, guys. Tony, you want to take us out?
All right. Well, that does it for today's episode of Road to Retirement with our hosts, Chris Anselmo and Tony Marlette Jr.
All right, see you guys.
Gentlemen.
Bye.